Welcome to the Tech Exits Podcast. In today's Buyer's Corner, we'll explore the M&A landscape from the perspective of top acquirers, gaining insights into their acquisition strategies, challenges, and lessons learned. On this Buyer's Corners episode, we're speaking with Don Penland, operating partner at Knox Capital, a private investment firm focused on acquiring and scaling tech-enabled businesses, with a particular emphasis on IT services and managed services providers. Let's begin. Thanks, Don, for joining us.
Hi, thank you. Appreciate the opportunity and nice to work with you guys again.
So, Don, to start off, can you tell us a bit about what Knox Capital does? What is its acquisition mandate, and what are the sectors you guys are interested in?
Yeah, thank you. So, Knox Capital, we've been in business since 2013 when we formed, and our focus is lower and middle market investments with tech-enabled businesses. For myself specifically, I joined about a year ago, and the investment thesis that I'm currently working on with the team is to help a variety of IT consultancy or managed services partners, MSPs, with a financial sponsor to help them grow both organically and inorganically.
Oh, that's very interesting. As you said, you're very into tech-enabled companies, and we've seen this field change a lot over the past few years. What are some of the trends you see in the future popping out?
Well, I wouldn't be a very good technology leader if I didn't talk about AI, right? So, but trying to avoid some of the hype of that, certainly in both kind of the tech-enabled different sectors, but also in the MSP space, we're seeing a lot of owner-founders and just the industry, altogether trying to figure out where AI fits, where does it create real value versus hype. And how businesses can introduce that to help grow, but also help with operational cost, right, and some of those things. We're just kind of very excited about some of the activity we're seeing in that area, and this is an area that we can help owners and founders, grow within the businesses as well.
You were mentioning about how you're reworking a bit over your acquisition mandate and strategy with your team that you just joined. At what stage of growth do you typically look to acquire companies, and why?
Maybe I'll give a little background first of myself, and then kind of what specifically what we're trying to accomplish, in at least in the IT consulting and MSP space. So I spent about 20 years across two different MSPs that I helped build and grow and have successful exits to private equity. And a lot of those MSPs grew from, let's say, $1 million in revenue to the last one was over 120 million in revenue. And that was through both organic and M&A strategies, from that perspective. So part of the reason for me joining Knox is I really wanted to shift from that day-to-day operations role to a more strategic investor, and basically trying to help MSPs do the same thing, right? From that perspective, as you guys probably know, there's a big consolidation that's been happening in the MSP space. So a lot of activity around that, and our goal is really to help support that and look at, a variety of different MSPs that have different strengths and different, we often say superpowers, right? Maybe that's in a particular vertical, maybe that's in a particular technology, and bring those together and, create a real contender, differentiated MSP national player from that perspective, which is not easy to do, right? There's a lot of great national and global MSPs that are out there, but we believe that, based on our experience and some of the different owner and founders that we're looking to bring together, that we can definitely support that, and most importantly support our clients, right, and give them a great experience. And some of that kind of ties back to what I said a few minutes ago is, how do we help clients, one, be secure, right? That's a constant liability that, keeps CISOs, CIOs, CEOs up at night. We want to help share in that liability, right? And help them secure the environment. It's, in this kind of era, it's not if, it's when, right? So, but putting all the different things in place that we can to help our clients on that. But we also want to be a real partner to the business. So, I think a lot of businesses are trying to figure out where AI can live, where can that actually help their business, both from a growth perspective, how do they leverage it in a go-to-market strategy, but then also how do they leverage it for those operational efficiencies that we talked about earlier. So, as we're going out and meeting a variety of different MSPs, we are very lucky that we've met a good group of folks, and we're starting to bring those together into a single platform. And once we get that platform going, we'll continue to do smart add-ons. We're not looking to do acquisitions just to do acquisition sake, excuse me. They need to be strategic. They need to add value to our clients, and provide real value creation and growth across the business and the partners that we're going to be working with.
From the acquirer's perspective, what's the most difficult part of the acquisition process?
Yeah, so I've gotten that question a lot over my career. I've done probably 20 acquisitions, ranging from very small, 5 people to over 45, 50 people as an acquisition into strategic. And I think it really kind of comes down to 3 things, right? And there's more, but I think if you can make sure you do these 3 things well, you increase your odds of success. The first is just making sure prior to, close of deal, that there really is true alignment between the financial sponsor, the strategic, if you will, and the company that you're acquiring. And I think there's often, for a variety of different reasons, there's different masks that are worn, during that dating, right? During kind of the initial relationship, and I think it's really important to make sure you're partnering with the right financial sponsor, and then vice versa, right? That you're partnering with the right, operators. And that you truly understand their why. I think that's something that, as a lesson learned, I think, everybody has different whys of why they might want to do a deal or do a transaction. And again, sometimes that why is hidden, right, behind some more, professional kind of components, right? Like, oh, we want to grow, right? Well, that's great, but why do you want to grow, right? Like digging into that, kind of next layer, and just making sure there's really good alignment there. Second is I think alignment internally. I think one of the lessons that I've learned over time is, if you're going out and looking at bringing a new company in, it's very important that you bear hug them, right? And making sure that, there's good alignment with all of your leaders internally of the why. It's oftentimes, as deals are starting to progress, there's a lot of confidentiality around those deals. So sometimes you can't be as transparent as you would like to be, right? Internally, just making sure that there's no leaks related to the potential acquisition. Because as we all know, a deal's not done until it's signed, right? And money's been moved around. So, with that, you're often, having to be a lot more confidential than you'd want to be, but making sure that you have that alignment internally as well, right? Of why we're doing this acquisition, and make sure that everyone on the team, the leadership team, supports it, right? To make sure that, once you announce the acquisition and you start the real hard work, right, of the integration, that there's full support. And I think, we've been sometimes surprised by the lack of support sometimes that we didn't get, even though we thought we had everyone on the same page. So again, it's all about, you can't just have that conversation once, right? You have to have it multiple times. And then I think the third is culture, which aligns to both of those, right? If you will, right? So making that sure there's a good cultural fit, that there's a good relationship, it's the right financial sponsor like us. And I think what gives us a bit of a differentiation there is our many years of operating, right? So when we think about private equity, I think I often say there's often a black cloud over private equity, certainly because of, at least in the MSP world, right? Because of the horror stories that are out there. And you always hear more about the horror stories than you do the good stories, right? And the good wins. Totally get it. That's human nature to a certain degree. So, part of my purpose of making this kind of next career chapter for myself is to try to help create a private equity firm that is very operator friendly, run by people who have operated in the past, right? Versus kind of traditional financial engineering. Nothing against those folks, super smart folks. And I've gotten the opportunity to work with some great folks on that. But, folks that never had to, sign something to say that their house was, there for a line of credit, right? It gives you a different experience. It gives you a different perspective, right? From that viewpoint. So I think, really working with folks that had been there before and operated doesn't mean that, we have all the answers, right? I think, we certainly like to, hear from our owners and partners and get their ideas, take, what we've learned, right? And then, how do we come up with the best answer for the business and our folks and our clients at that particular time. So that cultural aspect's really important. And I think that's where, you're seeing a shift in private equity where, they're being a lot more focused on operations and value creation within the portfolio companies. And that's usually driven by people that have, operated for 20 plus years. And bringing those folks into, those portfolio companies as advisors and really kind of help grow the business. So I think it's, the internal alignment, the acquire alignment, and then the culture. I think if you can, do those three, any technology issues or, HR issues or benefit issues, all those things can be worked out if you have those three, really in alignment and have the right folks at the table.
That totally makes sense, especially since you're overseeing a lot of deals. On that note, from what you've seen and from what you've experienced, how long do transactions normally take from start to finish? Is there an average time, something that people can expect, or is it pretty variable?
No, I think a great question. I think, certainly in lower middle market, it's not uncommon to, from the point of signing a letter of intent, an LOI, that deals can run 60 to 90 days. If all the financials are in good shape and, there's been some pre-homework done either by an advisor or an investment bank or those types of things, that certainly a lot of that work speeds up the process as well. But I think typically you're going to see that 60 to 90 days, for most processes. Now, the front end of that, that's dependent because, when you're working with owner and founders, we like to take as much time there of making sure there's that alignment and that there's comfortability and that they feel we're the right financial sponsor for them. So you tend to date a lot and for a good period of time because owner founders, this might be the first time they've ever been through this process. It's very often that Knox is kind of the first institutional capital that these owner founders have brought into the business before. And there's a ton of, questions because they've not done this before, right? So we really try to take our time and educate and be very empathetic that this is the first time they've gone through the process. We're just naturally sometimes on, autopilot, right? We know kind of the next things we have to do. It's kind of automatic, but we have to take a step back sometimes to remember that this might be the first time that this owner founder's gone through it. So taking as much time up front and making sure that folks feel comfortable speeds up the process once you get the LOI executed, right? With that alignment and that time that you've spent getting to know each other.
Thanks, Don. M&A from the acquisition side is a hard competition. How do you handle that? Is there a way you stand out from the competition?
Yeah, I think, I think to your point, like we like to think that being operators first is a differentiation, but there's lots of other folks out there, certainly in the MSP space. You get a lot of folks of similar backgrounds where they've run MSPs, exited those, and now they're either advisors or working with private equity. So we certainly like to think we're different there, but there's some great folks out there that have done the same thing and are taking the same path. I think it's a little bit of a weird answer, but it really just comes down to getting to know each other, right? So I think you could try to like classify these differentiations, but it really comes down to feel, right? And, do you feel comfortable? Do you feel these are, we're the right folks? Which kind of goes back to my answer a few minutes ago, is spending that time to try to understand that. I would say, for lack of better words, and we certainly need to be careful of this too, is time is money, right? So when we're meeting folks, we often the owner founders trying to figure out if we're the right people right away, so they don't waste a bunch of time, and we're trying to figure out, the same side of that coin, right? So that we are spending our time in the right places as well. But like that's difficult, right? Like you can't kind of figure that out in one meeting. You certainly go through the financials and say, hey, does it check the boxes on the size that we're looking for, the growth areas we're looking for, the strategies that we're looking for, right? But at the end of the day, that differentiation really comes down to the relationships and is this the right, folks to partner with? And because you're going to be partnering with them generally for a while, right? Our goal is certainly for owner founders to continue forward in the business. And, our whole periods are typically, 5, 6, 7 years to hit the goals and build the growth that, that we want and as well as those owners want, right? On oftentimes that second bite of the apple. So that's a long time to work together, right? So you got to make sure it's the right folks. So to me, that's the differentiation. We can go through funds and, how quickly can you put capital to work and, what's your IRR, right? And what you've done in the past. Those are all great things that, you need to share and make sure that are there. But it really comes down to the relationships. I can't stress that enough.
And on that note, what do you think are some of the common mistakes founders make when they prepare their companies for an acquisition?
Yeah, I don't know about like common mistakes. Again, I think, so much of it is if they've never done this before, they don't know what they don't know, right? So, again, I think we got to give folks a lot of grace related to that. But, I think when you're preparing your business, I think there's some things you need to think about, right? Like, are you fully exiting? The why, right? Like, are you looking to fully exit and retire? Do you want to take that next chapter, right? Whatever that is, 3, 5, 7 years. We'd like to think we know what that is going into it, but we also know reality in the markets, right? And, things like COVID that come at you that you never would see coming, right? So that sometimes it extends the whole periods, right? But I think, what we often see is, if there's not a banker involved, right, in some of those situations, getting your financials clean and understandable, breaking down your different revenue and cost components, right? That just makes us feel more comfortable that this is a well-run business and that it's easy to look at some of this data. Now, I don't ever expect most owner and founders to be as close to the data or as disciplined with the data as we are, right? That's part of our value that we bring as well, is to help with that because PE just looks at data differently, right? And that's one of the big lessons I had from moving from operator to this. But, just making sure that, we can understand the financials without a lot of narrative, right? And be able to kind of tell that story. And I think the other thing we see is certainly for the MSP spaces, there's typically for the sizes and lower middle market, there's not generally a very strong go-to-market strategy. And generally, I would say that's okay because that's something we can come in and help with. But to capitalize on kind of that first transaction, that first bite of the apple, the more we see that you have an engine, even if the engine's new or that engine is maybe not at the scale that we wanted to get to yet. But just seeing that you have some systems in place, that there's kind of a, for lack of better words, a system for go-to-market, but then kind of an operational system, something like EOS or something like that. Those are all things that if you've already implemented those, when we partner, like we don't have to do that basic stuff, right? We can then just really, focus on the growth and driving growth and potentially more M&A because, a lot of that foundational work and culture, if you will, is there. We don't have to do that, right at the beginning. We can really kind of focus on growth. And we would focus on growth anyway, but that foundational element helps us move faster, right? Which generally is good for everyone, right? Certainly anyone who has equity within the business over that whole period.
We've been talking a bit about how the whole process involves a lot of variables. So what are some of those variables that are deal breakers for you guys? Or what situations make you sometimes doubt, is this the real deal? Is this what we want to pursue?
Yeah, that's a good question. I think gaps in data, right? From that perspective, seeing that it's hard to get that data, right? The typical things that we would look at, obviously, heavy client concentration, right? If you're, 50% of your revenue is coming from one customer. I don't want to say that that's a deal breaker, but that's risk. So then we have to think about financially what that looks like in the deal and the structure of the deal. Client churn, we've seen some situations where There was client churn. Now, I think, what's important there is sometimes there's good client churn, which, sometimes will be surprising to some MSPs if, you have clients that are low margin, that are tough on your employees, right? Unusually tough, right? Unreasonably tough on your employees, and they're low margin, right? Those are reasons sometimes it's okay to, maybe churn a particular client. So, we like to kind of understand the churn, having the churn classified, right? Like this was a churn that we wanted, right? Because they were low margin, or this was a churn that, they got acquired by another company. So, they're the kind of sponsors MSP is going to take over, right? That's okay. Those are churn that we can understand. Those are churns you can't really control, but then understanding if there's churn due to client satisfaction, right? So I think, looking at some of those potential red flags are often things that cause us pause. And, making sure that you have your narrative and your reasoning behind that with data to back it up helps us get past that, right, pretty quickly. So those are just a few examples. Obviously, there's other variables, but I think those are some of the ones that, we certainly look at and creates some pause, which then kind of slows down the process until we kind of figure out how we can handle that. And PE is all about risk mitigation to some degree, right? So when we see a red flag or see risk, we've at least got to talk that through and figure out like how we kind of work through that, right? So making sure that you as the owner founder already know what some of those red flags or risk are and, how you're solving those. We're okay that it happened. What we like to see is how you're solving it so that it doesn't, become a tailspin.
We've talked about how it's very important to have everyone on board. And on this note, who do you think are some of the key team members a seller needs on their team to ensure a smooth M&A process from your perspective? Who are some critical members?
Yeah, I think this is similar to the confidentiality that we talked about earlier. We often, we certainly start most conversations with the owner founder. Sometimes they'll pull in the controllers, and in the right part of the process, we often ask who's your top team members, certainly manage, right? When it's time to read them in, or I think the saying is bring them underneath the tent, right? Is the right private equity term for that. But, we will ask questions about who the top talent is, right? Who's in front of the clients, who has the relationships with the clients. And then we're often looking at ways that we can, meet those folks, understand what their view of the business is, and also get them excited about what we're trying to do, right? I think, one of the great things that we are able to do is oftentimes we'll find companies that maybe have reached a certain plateau and they're not growing anymore, but that top talent wants to grow, right? They want to grow. They want to make more money. They want maybe, potential, equity within the business, maybe in a particular stock class, right? Or something like that, incentives, and those kind of things. So I think, when an owner founder is self-aware enough to say, maybe I've hit a particular plateau and it's time to look at maybe partnering with a financial sponsor or, partnering with a group of MSPs. I'm just going to use MSPs as an example, given that's a big investment thesis we're executing on right now. That can garner a lot of excitement with those key employees, which can help with retention. Yes, again, I'll go back to, sometimes being bought by PE is scary. And, so I think, getting to know us, and we're willing to go have those conversations if the owner founder is okay with it. Like, I think typically we can build that trust and talk about what we want to do with the business and how we want to grow the business, and having been operators ourselves, right? I think that helps a lot. So getting those right folks outside of just the typical things, your HR department, if you have one, finance, CFO, controllers, those are kind of the typicals, right? But we like to then get, if we get the opportunity to meet that next layer of talent, so a lot of times it's technical talent and sales talent, right? And get them excited about what we're wanting to do and make sure they see the vision of where we want to go and why we're doing this, right? Like, to my knowledge, no private equity firm buys a company to watch it shrink, right? The 100% goal is to have it grow, and we want those folks to grow with us, and we hope that opens up new doors and new opportunities for those teams. And again, I think from a purpose perspective, that's one of the most exciting parts of this, is how we get to help people and the folks that we're responsible for in the business grow, right? And help them with their career.
After the acquisition is done, what are the challenges you faced post-acquisition, particularly during the integration process?
Yeah, I think I'll start with that internal alignment, right? Making sure that that everybody was on board with the why and what the investment thesis, and that they support both the new business coming in, the employees coming in, and the clients. Again, I think that's something I can't stress enough, is to making sure that everyone knows why you did that, and bear hug those folks as they come into the industry. It then becomes down to, change management. And, I think if you're familiar with it, right, who moved my cheese? There's a lot of change that comes with that, right? And making sure that you're doing a good job on that. And I'd like to say that I always did that perfectly. And I think, being self-aware, you're doing the best that you can, but there's always new things that you can learn, and making sure that, the folks understand where you're going, and you're going to hit some bumps through that process, but you get on a call, you get in a meeting, you talk it through and figure out what's good for the employees, the clients, and the business, right? And move forward with that. So I think, that alignment, I think, a lot of heartburn sometimes happens with changes that, healthcare plans, right? Because maybe you're moving different healthcare plans and those types of things. So there's things we can do there, where sometimes we like to let, the current healthcare plan run for the next year, depending upon when we did the acquisition. I think those can, that's hard on people when they have to look at maybe changing the healthcare plan. So I think, putting a lot of thought into the people parts of it, as well as, the interdepartmental merges, right? And the different personalities and that. So putting some structure behind that. And then providing guidance internally. Like if your internal team, right, is not used to, these types of transactions, you got to give them a lot of guidance. And I think, again, I think that's a lesson learned over time, that you just naturally think people are going to be excited and want to kind of, bring those folks in, but they just might not know what to do. And you need to try to be a little bit more prescriptive in that. It's easier to do when it's a smaller acquisition, right? But as you kind of get bigger and those acquisitions get bigger, those are some real challenges. And I think that's where then you look at dedicated folks who, are helping with project managing the integration, right? From across that perspective as well.
To wrap up this episode, what is some advice that you'd give to founders going through an M&A process, or that are planning to go through an M&A process, to make their companies more attractive acquisition targets?
Yeah, I think it's, lots of curiosity. I think we touched on some other things that are like getting your financials in order and understanding your data and understanding maybe any red flags in the business, and having a strong answer or narrative related to that. But, staying curious and making sure that you're asking a lot of questions. I think, again, no one gets, we get that some founders haven't been through this before, but looking at this as an opportunity for growth and asking questions around that. And again, making sure you're picking the right partner and spending that time. And that partner might not always be the highest bidder, right? Like when we see, again, this space, we see a lot of quote unquote auctions happening, right? Where let's bring in 20 potential buyers, because there's more buyers than there are sellers right now in this market. I get it, right? And, but it's really understanding why you want to do this. And if you're looking to retire and exit, you should absolutely drive to an auction, right? You should get the highest dollar amount that you're looking for. Likely that's going to come from a strategic that's adding you into a bigger platform. They're typically going to have a higher multiple on that, because they're going to look at some synergies and be aware of those, that's going to happen, right? And that's how they're able to kind of pay up, if you will, in those scenarios. If you're really looking at a financial sponsor in a team that's, in the midst or the beginning of that, 3, 5, 7 year next chapter of growth, sometimes it's not about the auction, it's about picking the right partner, because like I said earlier, you're going to be working with them over that time period, right? And want to make sure that there's trust and the right folks there. Doesn't mean there won't be any bumps, right? Like, I don't care how much you date, something's going to come at you left field. We joked about COVID earlier, which probably shouldn't joke about it, but just meaning that nobody could have saw that coming. And we all had to kind of figure out what that meant to our businesses and how we take care of our people and our clients during that time period. Those kind of things are going to happen. And you're going to have tough conversations, but, having a partner with you that, you can have those tough conversations and then, shake it out, an hour later, I think is, the most important if you're going to move forward, with that partnership. That's the advice I can probably provide at this point.
And it's a great piece of advice I think our audience will really appreciate. Thank you, Don, for taking the time to chat with us today.
Yeah, thank you. It's always good to see you guys and participate in these kind of activities. And love, for folks to reach out to me on LinkedIn with questions, or, if they disagree with something I said here, let me know, right? Like, again, want to learn from other folks as well. If something I said didn't make sense, and that can be a learning experience for me too. So thank you so much.
Thank you for joining us today. Are you considering selling your tech company? Head over to quorumgroup.com, our tech exit sponsor. If you'd like to learn more about selling your tech company, join us at one of our Tech M&A Masterclass events. Attendees of the Tech M&A Masterclass will gain practical knowledge on how to achieve the maximum valuation for their company gained through expert-guided workshops, hands-on exercises, and M&A case studies, or online through our virtual conference and webcasts. Head over to WFS.com for more details. We'll see you again for the next episode.